talk about property holdings. And the importance of this is really going to vary depending on what you've chosen as your company to read. Now, in the case of Viacom, it's going to be ever so slightly less important, but not altogether unimportant. Properties becomes very important in companies where the hard assets, such as buildings, are really going to be very relevant for how you value the company. So definitely in something like the REITs or the hotel areas, you're going to want to review properties fairly closely. And what you're really doing with property is you're determining what might be the true breakup or book value. So the nuggets and gemstones that you might be looking for in the property section really are going to have to do with companies where the assets are on the books for less than what they might be worth if you resold them. And sometimes that can be because the property's in a really cool location, and so it's on the books for something significantly less than what if you resold that property or reused that property for. That is definitely a common reason why people might review this property section like crazy. Another reason might be similar, like in oil and gas, seeing where the properties are located, and then some people might be exploring water rights underneath that land and stuff like that. Maybe if it's heavy agricultural. So perhaps you're looking at a timber company or a lumber company such as Weyerhaeuser, which is now a REIT but used to be something else. And you might be thinking to yourself, hey, are those areas that are currently woods and used for lumber, could they be more valuable if I rolled them into a condo or something like that and sold it off that way? So these are all legitimate reasons for what you might be observing in the properties section. But I would read this section, see if any of that applies when you're trying to mine for gemstones in the document, and then move on quickly if it's obvious that that's not going to be the case. In the case of Viacom, given what their holdings are and how small they are relative to the bigger picture, what Viacom's doing, I would say it's probably slightly less important. Now, final word though on properties is that it's good to just know that a business doesn't have a lot in this section, because then certain valuation metrics are a little less relevant. For example, book value oftentimes is going to be a function of the tangible assets, the actual physical assets. And property is oftentimes one of the bigger line items. Now, it is the case that this section of the 10K is going to relate to the balance sheet. So for those that are following along there, I'm not going to go through the financial statements so aggressively in this particular tutorial because I think that really deserves its own commentary. But you're going to be looking at the balance sheet. You're going to be looking at the numbers that relate to book value, which will be property, plant, and equipment, and things of that nature. And you're going to be trying to assess whether you think that there might be something going on there. Additionally, you might be wanting to look at depreciation amortization, especially if you're new to understanding all the different things that can be depreciated and amortized. That's going to be on the cash flow statement, and it's going to relate to a number of different metrics, not the least of which is earnings before interest, tax, depreciation, amortization, or EBITDA. And of course, it impacts operating cash flow. So definitely don't ignore this section, but have a look at it. And if you're doing a deep dive into that part of the balance sheet or that part of the cash flow statement, knock yourself out on this section.